Thank you for taking the time to join us today. My name is Joe Corio, Senior Vice President at URL Insurance Group, and we're very glad to have everybody on board with us this morning. We have a great webinar for you today. We're going to be about 30 minutes. We'll have a question and answer period along the way, and we'll answer those questions at the end. But briefly, I want to thank everybody who has produced business with URL throughout the year or years. We truly appreciate your business. We know that you have a choice of which marketing companies that you deal with, and we do our best to earn your business every day. So thank you for your business. For those of you who are brand new to URL, welcome. We hope we can start doing some business in the future. And URL is a full-service marketing company. We have a full line of annuity products, single premium life products, the traditional life products that you know, as well as a individual health department. We have a group health department, and we have an ancillary product department, and we do everything here but some. We don't do variable or security products, and we don't do property casualty. So please check out our website, www.urlinsurancegroup.com, if you haven't seen us before. Briefly about today's program, in regards to single premium life plans, they have been picking up great momentum over the last 2 years. More and more agents and prospects are becoming aware of the benefits that these plans offer. So if you're selling annuities, life insurance, or long-term care products, single premium life is a product that you definitely need to be aware of. It's a great complement to these markets that you're already in. And if you don't ask your client about it or show your client the product, I'm sure somebody else will. Single premium life has changed dramatically over the years since the early days. As I mentioned, sales have started to soar in about 2013 and continued to do the same this year. And 2014 has seen record high sales for this product here at URL. The biggest change that is contributing to the record sales are the living benefits that single premium life offers. It has been a game changer for this product. So let's take a look to see why single premium life is so popular right now. There's a few reasons, and first of all, the low rates on CDs is a big factor in why single premium life is so popular. It's estimated and I've seen a lot of numbers thrown around, but it's estimated there's about $6 trillion in banks, in CDs, money markets, and passbook savings accounts. A lot of that money is just waiting to be transferred to the next generation. What better way than life insurance to transfer money from one generation to the next? Life insurance has always been and still is the most efficient way to transfer money from one generation to the next. So with today's ridiculously low rates in banks, it makes more sense than ever to move some of that bank money over to single premium life. And with the liquidity of the product, which you'll see shortly, it's almost a no-brainer. Second thing that makes single premium life so popular, the high cost of long-term care. New long-term care plans are very expensive, and thousands of old long-term care are being repriced due to inaccurate premium assumptions from years ago. So the high cost of long-term care, along with the restrictive underwriting that long-term care has, is leading to more single premium life sales. Another important aspect is that long-term care has the old use it or lose it principles that single premium life with living benefits does not have. If the living benefits are not used, the policy still has many valuable features that will make it attractive to your clients and their beneficiaries. Okay, another reason single premium life is so popular, old cash value life plans. There's thousands and thousands of old plans that were written years ago that have a ton of cash value and very little death benefit. It's not uncommon here at URL for us to see an old life plan come across with a $50,000 death benefit and say $30,000 or $35,000 of cash value. Single premium life is a way for policy owners to keep life insurance protection but eliminate those ongoing premiums. We'll give you some marketing ideas on how to market to that group of people in a little bit later. Finally, one last thing that makes single premium life so popular that I'll mention is taxes. Nobody wants to pay more taxes than they need to. We can use single premium life to transfer taxable money into non-taxable life insurance. Now, we're not talking about avoiding taxes. We're talking about minimizing taxes, and we'll talk about that in a little more detail as we go along here throughout the webinar, and we'll show you some examples of how that will work. Okay, you now have a feel for why people are receptive to single premium life. Let's take a few minutes to talk about the single premium life products themselves. Here at URL, we have a variety of single premium life carriers and single premium life products, each with their own unique provisions and underwriting. We represent all the major carriers: Equitrust, Baltimore Life, Lincoln, Americo, Genworth, National Western. All these carriers have products, and they're all a little different. Some have more death benefit. Some are geared towards more long-term care benefit. Some are underwritten, simplified with just an application. Some have full underwriting. So it depends on what your client's looking for, what you're looking for, but we have the products that you need here. Almost all these products have the same basic key selling points. Single premium life products provide these provisions. They all provide an immediate death benefit, which is greater than the premium, and it's generally free from income taxes. They all also offer tax-deferred growth. Most of the plans are either whole life with set rates declared annually by the carrier, or they're universal life products, with the most popular UL plans being indexed UL, which allows for the potential of greater cash value growth because it's tied to an outside index, such as, say, the S&P 500. So as these cash values grow, so do the death benefits. And again, death benefits are usually tax-free if it goes to a named beneficiary. But here's a big selling point. One of the biggest driving forces in the sale of single premium life is the feature that allows the clients to have access to the current death benefits when they need it for unexpected medical conditions, such as chronic illness, which is also known as home health care, terminal illness, or full-fledged nursing home confinement. Now let's take a quick look at the two products offered by one of our top carriers, which is Equitrust Life. Equitrust offers both a whole life plan called the Wealth Sure and an indexed UL plan called the Wealth Max Bonus. First of all, I want to take you through the Wealth Sure. Wealth Sure offers a guaranteed death benefit greater than the premium, as I mentioned earlier. Current values are, guaranteed values are based on a 3% interest rate, and currently the credited interest rate is 4%. And this product does have living benefits for home health care, long-term care, and terminal illness. The client can also borrow 5% of the accumulation value each and every year after the first year, kind of like a free withdrawal provision on an annuity. So if an emergency arises, they don't have to surrender the policy. They can just take a free withdrawal if they'd like to, which makes it very nice. Now let's look at the guaranteed benefits for an example on a 62-year-old female if she placed $50,000 into the plan. Now what it does, it provides an instant guaranteed death benefit of $95,500. That's almost double the premium, and from day one. And the face amount is guaranteed for the life of the plan. So right away, you can see the big difference between a $50,000 money in the bank or $50,000 in the WellSure Life. As you can see here, the non-guaranteed death benefit based on the 4% is $99,757, which is double the premium. So wouldn't your prospects feel like this is a great way to leave more benefits to their beneficiaries? In addition, the death benefit can be used for living benefits as well, as I mentioned. As you see here, based on the guaranteed death benefit, the plan provides for $95,250 of nursing care benefit or chronic illness benefit, and slightly less for terminal illness. In other words, all of the current death benefit is available to them with the exception of $250. If the client exercises this provision, they do charge a one-time $250 fee, so that is not available. Every other dollar is. Now, please note here, we're showing the available living benefits based on the guaranteed death benefit. The insurance company, the insurance departments prefer that we do that. However, in reality, the actual living benefits are calculated on the non-guaranteed benefits. So it's always going to be a little greater than the guaranteed. So if we look at the tabular detail on this particular plan, and we're just showing 20 years here, although the policy will actually run to age 121. You can see the guaranteed and the non-guaranteed values. On the guaranteed column, the minimum death benefit never goes below $95,500. And on the non-guaranteed side, you can see the accumulation and surrender values. They steadily show some growth, like any whole life plan. And the death benefit, it hovers around the original death benefit. The reason they don't grow steadily is just like any whole life policy, there are some charges in here, especially the first 10 years. And there's like cost of mortality charges and so forth. So the death benefit, depending on the age and the face amount, is going to fluctuate, but it's going to stay around that original amount. As you can see on this example, in 15 years at age 77, the current death benefit is still around $98,000. And if the client needed home health care or nursing home care, all that would be available with the exception of $250. So we're talking about $97,831 that would be available to them. Okay, now the second plan that Equitrust offers is a little more popular, and it's a single premium. It's called the Wealth Max Bonus Plan, and it is an indexed universal life plan that offers 3 indexing options and a fixed account. With the indexing, the potential for cash value and death benefit growth may be better than the whole life, similar to the potential of an indexed annuity over a traditional fixed rate annuity. Of course, past history does not guarantee future performance, but if you keep a policy long enough, an index policy usually will outperform a fixed policy. Okay, a quick look at the specs on this product, the Wealth Max Bonus. Here we go. We can see here we have a guaranteed death benefit, of course, greater than the premium. Guaranteed values on this product, the guarantees are based on 2%. Non-guaranteed current rates based on the performance of the S&P. And we'll go through the caps, and on this product they're very, very high. It offers a 12% instant bonus, thus in the name Wealth Max Bonus, to jumpstart the cash value. And it offers a full return of premium for your client. So there's no excuses. Suppose I need my money back, or suppose something better comes along. They can have their money back at any time. Of course, there is a chargeback of commission on this product in the first 2 years. There are living benefits for home health care, long-term care, and terminal illness. And indexing options, there are, like I mentioned earlier, there are 3. And of course, it does have the 5% free withdrawal starting in year 2, just like the WellSure does. So pretty solid plan. But really what makes this plan so popular is the 12% instant bonus and the full return of premium, no question asked. That's what's really making it go. So using the same example as we did on the other product, 50,000 on a female 62. The guaranteed death benefit is 98,000. And in this case, a non-guaranteed death benefit of $130,731. It's a pretty nice increase for a 62-year-old female on 50,000. All the death benefit, with the exception of $250, would be available for home health care or nursing home care. So in essence, in this case, she would have about $130,500 of living benefits. Okay, if we look at the tabular detail on this plan, you can see the guaranteed and non-guaranteed values. On the guaranteed side, you can see the death benefit never goes below $98,000. And you can also see on the guaranteed side the cash surrender value the very first year is $50,000, so the client can always have their money back. Now on the non-guaranteed side, you can see the accumulation value and the cash values, they increase. The death benefit, the first 10 years fluctuates a little bit. Like I said, like any life policy, there are some charges in there, and of course there's mortality charges. After 10 years, the surrender charge disappears, and you can see the policy really takes off. Again, this is based on indexing. It's not guaranteed, but it's probably more likely that the client's coverages would be more like the non-guaranteed columns than they would be the guaranteed. I should mention both of these plans offer tremendous commissions. The commission on the whole life is a couple points higher than the Wealth Max bonus, but the Wealth Max bonus is our most popular plan because it simply outperforms the other products. And it actually outperforms most of the products in the industry. So hopefully you'll have a feel for how the products work and how they can work for your clients. And now what I'd like to do is I'd like to turn the phone over to my associate, Maria Adams. She's going to give you a little better idea of how easy it is to write the plan, who's buying the plan, and that kind of thing. And then I'll get back on the line, and we're going to talk a little bit about marketing the product, who the prospects are for this type of plan. And I think when you see the list, there's probably a couple that you haven't thought of. First of all, I'd like to introduce Maria Adams, our marketing specialist here at the Annuity and Solutions Department of URL.
Hello, everyone. As Joe had mentioned, I'm going to go over the specs on these two great products that he's been discussing. As you can see, the issue ages for the Wealth Max bonus is 50 to 85. And for the Wealth Shore, it's ages 55 to 85. The minimum premium for both products is $10,000, and the maximum issue is $750,000 for face amount. And again, these are single premiums. There's no flexible premium payments for these two products. Also, it features up to 5% of the current accumulation value that they can withdraw after the first year, so if they need to get some funds. The interest rates and caps, as you can see for the Wealth Shore, the current interest rate is 4% and the minimum at 3%. And for the Wealth Max bonus, you can see what those current interest rates and caps are along with their minimum interest rates. And along with the two products, the selling point on both of them, again, is the living benefits that these products provide for your clients. I also wanted to bring to your attention, as you can see, these caps are higher than the annuities, and that's because there are mortality charges in the policy. So the life companies don't have to rely on making a profit on the spread like the annuities do. So you will see these interest rates and caps a lot higher. On the next screen here, I just wanted to go over the statistics on the two products. As you can see on the Wealth Max bonus, 77% of sales is because of the Wealth Max, because it provides the 12% bonus. It also provides a full return of premium, and also it gives more potential of growth because of the indexing options that it does offer. The average size of premium is $81,500, higher than most annuity sales. You can see the gender here. Females just love this product, especially as females. They don't want to be a burden to their family, so they have the death benefit there for their children if they need it, or they also, if they don't use it, along with the death benefit, they can use it for long-term care or home health care for themselves, which is very nice. Source of funds, as you can see, most of them are coming from the banks, cash with these applications, savings or CDs, and then you can see the numbers there with the annuities and the life sales. The average applicant age is around 72, and then you can see the breakdown on the age brackets of the percentage of sales. Now, how to get started with this product? Very, very easy. After getting appointed with Equitrust, you would complete an application and a disclosure with your client. After you do that, we strongly suggest and recommend that you initiate the telephone interview with your client while you're there with them. Once you get that completed, you will then either mail or fax. Mostly we suggest that you go ahead and fax that application into Equitrust, and within 48 hours, most likely you will have a decision on the case. There's no pyramids, need to be no blood, which is very nice, especially at that age. People don't want to be poked and messed around with, so it's a very, very nice, easy process. So we just always suggest and strongly recommend that you do a phone interview after you complete that application. Now I'm going to turn it over to Joe, and he's going to now go over and talk to you how or who these prospects are for these plans.
Thank you, Maria. Don't forget, ladies and gentlemen, if you have a question, you can type it in, and we'll answer them at the end. That's our form of communication here today. But as far as prospecting for the single premium life, we already mentioned in the beginning, excuse me, that there are trillions, and that's trillion with a T, of dollars in banks. A large portion of that is sitting there in accounts earning less than 1%, and it's just waiting to be transferred to beneficiaries upon the bank holder's death. So the single premium life, these would be great prospects for single premium life. Think about it. Wouldn't the clients want to immediately increase the beneficiary's inheritance by 30, 40, maybe 50% or more into a tax-free death benefit and still have full use of the money for themselves, whether it's through the free withdrawal, the return of premium option, or if health issues go awry, they can use it for the living benefits. So it's a great situation for those people who win the bank money. The other thing we mentioned earlier, prospects, are the people with long-term care coverage. Many folks don't only like the high cost of their long-term care, whether it's on initial purchases or on renewals of old policies, but they don't like the use it or lose it benefit that comes with these plans. So this is perfect for single premium life. I don't know how many times I heard people balk about a long-term care premium being so high, and then they follow it up with, especially for something I may never use. I might throw away $5,000, $6,000, $7,000 a year for 20 years. I might die of a heart attack and never need it. So this is a good alternative for those type of folks. The other thing is on the long-term care is that some of the people that you have maybe approached for long-term care maybe didn't qualify. Maybe they were declined for the long-term care coverage. Well, single premium life is a life policy, so it is actually underwritten for mortality where long-term care isn't. So we have a lot of folks that get declined for long-term care, we apply for single premium life and they're issued standard. So it's a great alternative for those people as well. Now, how about existing life clients? I said earlier, a lot of people have old UL plans that are ready to implode, or ones that never add premium to anymore. And if you're in the life business, you probably get a copy of your client's annual statement each year on their UL, whatever they might have. And you can tell on those right there, if you see a pattern where people have not paid premium in the last year, 2 years, or 3 years, the coverage is still in force, but the cash value is eating it up. Those are perfect clients to contact. And a simple conversation about, for instance, they'll go like, hey, John, I noticed you're not paying any premium on your life plan. You still had the coverage. Is there a reason you're not paying the premium? And most people say, you know, I'm just tired of paying the premium. I really don't need it. I'm letting it run out. Well, these would be perfect clients. Let's take that cash value in their old plan, roll it over to a single premium life. They have no more premium payments, but yet they have life coverage that won't decline, and they'll have the living benefits, and they'll have the availability to those cash values as well. So those people make great prospects for single premium life. Finally, people with annuity clients. We mentioned, you know, we used to think annuity clients, I would never transfer my annuity people to life. You can't do that anyway with a transfer. But we used to run from those type of people. But when you think about it, first of all, you might have a lot of annuity clients that you wrote annuities on years after years after years, and they might call you up and say, you know, I got another $30,000, $40,000, $50,000. Let's put it into another annuity. Well, on those old annuities, on the qualified ones, they're going to be taxable to a beneficiary someday. On the non-qualified, the gain is going to be taxable. So what you're really doing by setting your clients up with annuities is setting up a tax time bomb for a beneficiary. Sooner or later, they're going to inherit that money, but they're also going to inherit a nice tax bill. So maybe you can suggest, if your client's in decent health, that they just look at the single premium life, because when they pass on, it'll provide a tax-free death benefit for the beneficiaries, and they can take this tax-free money and use it to pay Uncle Sam without cutting into the inheritance that they're going to get. So they're real good clients, or excuse me, prospects for this type of policy. Now let's take a quick look at how it would work on a non-qualified annuity. Let's look at this example. Let's say you had a female 65. She put $100,000 into an annuity a couple years back, and it grew to $130,000. So you can see the gain there over the years on this non-qualified annuity would be $30,000. If she was in the 30% tax bracket, that's about a $9,000 tax hit. So if she canceled her annuity of $130,000, took out the money she needed for the taxes, $9,000, she still has $121,000 left. If she put that $121,000 into a Wealth Max bonus plan, the guaranteed death benefit would be $220,000, much greater than her annuity value, and it's going to grow from that point on tax-free. So the non-guaranteed death benefit on this plan is going to be over over $300,000, and that's going to all grow tax-free until this client passes on. When the beneficiary inherits it, they inherit every penny if it's set up correctly as far as the beneficiary. So that's where we're seeing some annuity business being turned into single premium life business. And if you have any questions on that, I'll be glad, give me a call. I will be glad to discuss and walk you through in a little more detail. But basically, that is how it works. So that's single premium life. It's easy to obtain medically. You don't have to be squeaky clean. The average age is 72, so we see the high cholesterol, high blood pressure. That's no problem. We have the products, whether you want death benefit is imperative or the long-term care benefits imperative. We can go either way. We've got some great prospecting ideas for you. So all you have to do is get started. So that's what we're here for. Please feel free to call us. Let's see if we have any questions there. Hold on a second here. Yep, I do see some. Issue ages. I think we went over them. It's 50 to 85 on the Wealth Max bonus and 55 to 85 on the Wealth Sure. Another question, issue clarifications, male, female. Yeah, on the issue clarifications, it's very simple. It depends on company. The examples we gave you, it's either male or female, smoker or non-smoker. There's no preferred standard or anything like that. You're either a smoker or you're a non-smoker. The company builds in some table ratings on these to protect themselves so they don't have to worry about that kind of stuff. So there are no preferred ratings. And the other question was, what's the simplified underwriting? Again, with this company, it's just an application and a phone interview, and we have a couple of companies that do that, and the agent can be present for the phone interview. The company has no problem with that. So that makes it nice. You sit there, you take the app, the questions and the answers are fresh in your client's mind. Now you pick up the phone and you do a phone interview. So turnaround time is about 48 hours on those type of businesses. You fax the application in, so it's a really slick process. Let's see if we have any questions. No, I think we got all the questions answered. I think we're about out of time anyway. So again, please feel free to call myself, Joe Corio, my associate Maria Adams at URL. Our numbers are on the screen there. Our extensions are there. We'll be glad to help you. We'll be glad to get your personalized proposal for your client or any marketing materials that you need. Thank you for taking the time to be on our webinar today. I hope everybody enjoys a happy, a healthy, and a prosperous new year. Thank you.